and welcome to this fortnightly market outlook video. I am Devarsh from HDFC Securities. Today I am joined by my two colleagues Nagraj and Ajit. Nagraj will talk about market view from technicals, and then our colleague Ajit will join and he will share data from derivatives. In the end, I will try to conclude the today's webinar. So let's straight away jump to today's content. So the key event for the last fortnight is the failure of Silicon Valley Bank and also the closure of another large regional bank, New York Signature Bank, which had a heavy exposure to cryptocurrency markets. So that ignited fears that it would set off the waves of new collapses across the US banking system. The Fed and the FDIC, Treasury Department, had to announce that the all SVB depositors would get full access to their funds, and also they made additional funding available to safeguard other deposits and potentially averted a big crisis. Now, after this event, market now hopes that the Federal Reserve would be forced to moderate or even pause the interest rate hiking cycle. By the end of the week now, futures market were pricing in the zero likelihood of a 50 basis point hike compared to 40% chance just a 1 week before, and now the 25 basis point hike seems to be on the cards. Now let's look at the charts of important markets across the globe. So first the S&P 500. So S&P 500 found a support near 3800, and after a rally towards 4000 again because of the events of this week, it has corrected a little bit. Nasdaq similarly had a sharp fall, but it managed to recover during the week. While the banking system was in crisis, the asset class which garnered the most interest was the gold, and gold surged to almost $2,000 an ounce. Similarly, we saw that the Bitcoin was also much in demand. Good amount of buying was seen around 20,000 level, and it has reached to 27,000 levels. Let's look at the indices. So over the last fortnight, we see about 4 to 5% kind of a correction in US markets, and the same was reflected in many markets like Germany, Hang Seng, and Indian market also. The monthly data for the indices suggests that the markets are still in the downtrend. All global markets have corrected over the last 1 month. In India, power sector continued to outperform. The technology, auto, and banking are some of the laggards for last fortnight as well as last 1 month. In economic calendar, we see that a lot of important events are scheduled this week. On 22nd March, we are going to see the FOMC come out with its policy pronouncements. On March 23rd, Bank of England is going to announce its monetary policy meeting outcome. Now let me invite my colleague Nagraj to share his views from technical perspective. Over to you, Nagraj.
Hi friends, this is Nagraj Shetty, one of the technical and derivative research analysts at HDFC Securities. Today we are going to discuss about the markets. We will discuss from the chart pattern of smaller to larger time frame, and we will discuss about the fortnightly market outlook for the next 15 days. On the daily time frame, formation of a couple of doji patterns were seen on Thursday and Friday. And this is a quite important pattern. Market has made a swing low of around 16,850 levels, and this is indicating that market is at the formation of a lower bottom at 16,850 levels, and we observe a larger degree of negative sequence like lower tops and bottoms over the period of time. This is what Nifty has been forming a lower bottom around 16,850 levels. At the higher levels, friends, 17,300 to 17,400 is going to be a strong resistance, what we may observe over here. Move on to next chart. It's a weekly time frame. What we can observe is a long negative candle this week on the weekly time frame. And in the previous few weeks, what we have seen after the formation of long negative candles, Nifty has bounced back slightly for 1 or 2 weeks. What we can observe over here with this chart on the chart. But we need further confirmation of upside to call this as a short-term bottom reversal. So as market has rebounded from the lower levels in the previous week after the formation of long negative candles, we expect that a similar kind of a thing may happen this time too. So at a lower level, around 16,800 and 900 is going to be 16,800 is going to be a strong support for the market, and we expect upside bounce from the lows in the coming weeks. And in mid cap and small cap, the negative trend continued, lower tops, lower bottoms. So we can see on the mid caps, and that mid cap sector is continuously hitting the lower support around 30,000. And in small cap as well, we may observe the lower top formations and repeated testing of the support. Technically, this is not a good sign, but we need some decisive upside bounces. Having placed at the support, one may expect minor upside bounces from the lower level in the both mid and small cap segments, but confirmation of a reversal will come only after a decisive upside movement from the support. So next week is going to be crucial for this broad market indices, and we expect small upside bounces from the lower support. So the conclusion is the market has finally showed a sustainable up move on Friday after a sharp weakness of previous 5 sessions. Nifty is in the process of forming lower bottom reversal, as I mentioned, around 16,850 levels, but that reversal has not yet confirmed. We need a decisive up move in the next week to confirm as a bottom reversal. On any sustainable up move from here, the crucial overhead resistance could come into play around 17,300 to 17,400 levels. Any failure to move above the said hurdle could mean that there is a higher possibility of Nifty revisiting the lower area once again. Sectorally, banking, metal, realty, infra, PSC, and PSU sectors have formed some promising reversal candle. Upside bounce is likely in those sectors in the coming week. Mid cap, small cap are likely to show minor upside bounces. Sharp up move from here could change the trend. That's all from my side. Thank you.
Thank you, Nagaraj. Now let's go to Ajit for derivatives. Over to you, Ajit.
Hello everyone, this is Ajit Naik, Technical and Derivative Analyst at HDFC Securities. Today, let's discuss on the outlook of the market from a derivative perspective. So on Friday, what we have seen is short covering in the Nifty as well as in Bank Nifty, where we have seen 0.44% fall in open interest in Nifty, by Nifty rising by 0.67%. However, there was a short build-up during the week where we have seen 9% rise in the open interest with Nifty falling by 1.8%. Similarly, short covering was also seen in Bank Nifty futures, where we have seen 2% fall in the open interest, with Bank Nifty rising by 0.87%. However, short buildup was seen during the week, where we have seen 9% rise in open interest, with Bank Nifty falling by 2.19%. If we look at option data, we can see that 16,900 to 16,800, we have seen put writing. On the other hand, 17,000 at 17,300, there was call writing. Let's discuss a little bit about the India VIX. So VIX plays an important role for option pricing. So what we have seen is the VIX is continuously falling, and we can see that here it has taken a good supply at this level, and now again it has reacted from this level. So whenever the VIX falls, generally the market tends to go up, and whenever the VIX raises, a market shows a similar panic kind of a situation. So when VIX will react from this level and move down, so we can expect that market will show us some sort of relief rally. And at here, we can see 16,900 and 16,800. There is good amount of open interest from the put side, and also at 17,000. So we can assume that in coming session, 16,800 to 16,900, there will be a good amount of support to the market, whereas 17,300, there is huge amount of open interest which has built up on the call side. It will act as a resistance. If we look at from the open interest change perspective, we can see a similar kind of a situation where 17,300 will act as a resistance, and 16,800 to 900 will act as a support. So on the basis of this, what we expect market in the coming session, market to show some kind of a relief level. Also, this is a major information that FIS long to short ratio has now moved to 0.11%. So when it moves, we can see it has fallen sharply. So at this scenario, there is chances that FIS covers their short, because we can also see in the March there was a sharp decline in FIS long to short ratio, and there was a huge short covering rally from them. So we expect similar kind of a situation in coming weeks. So what is the outlook for the market? To sum it up, we have seen short covering on Friday, put writing at 16,900 to 16,800 level. FIS long to short ratio has reached oversold zone, falling VIX and PCR at oversold zone. If we combine this information, what we can derive at is we can hold our long position with stop loss of 16,800 for the upside target of 17,300 level. So if there is any close above 17,300 level, then we can see further short covering rally, which can take Nifty up to 17,500, 17,600 level. So during such scenario, what we advise is we have to keep a very stock specific approach. Selective stock may move in this rally, and we have to focus on those sectors. Outlook for the Bank Nifty. We have seen short covering in the Bank Nifty, put writing at 39,500 to 39,000 level, and immediate resistance is at 40,000 to 40,500 level. So we can hold Bank Nifty with a stop loss of 39,000 level and can expect Bank Nifty to test 40,500 level in coming session. Any close above 40,500 level, there would be again a short covering in Bank Nifty as well, which can take it to 41,200 level. That's it from our side. Thank you.
Thanks, Ajit. Now let me conclude. So global markets are rebounding. The scare over the US financial systems are actually misplaced. When we see the US banking system and especially the tier 1 capital, they are quite adequately capitalized. Because of the recent events, the 2-year treasury yield is suggesting that the more or less Fed is done now, and we are likely to see interest rates hike being paused in US markets. So markets are rebounding and short-term traders can continue to keep their long positions with the appropriate stop loss. The stop loss should be kept for Nifty is at around 16,800 level and for Bank Nifty around 39,000 levels. With this stop loss, we can expect some rebound over the next fortnight. That's all for this video. We hope you like this video and find the information provided useful. If you have any comments or suggestion, do reach out to us. Thank you.